Hi, I'm Ed Baldwin with your weekly wrap-up for Friday, May the 20th. While the markets are becoming more volatile each week, we have seen them post new highs to start the week, only to pull back and finish lower by the end of the week. There is a lot of noise out there pushing these markets in either direction, and the biggest influence this week is the weakening economies with rising inflation and the raising of interest rates in an effort to control it. The equity markets, well, they were down hard this week, and this has spilled over into the grain and oilseed markets, despite there being a lot of reasons for them to hold up and possibly even move higher. Until the outside markets can settle down, we are in for a bumpy ride. The July canola contract this week was down $9.70 a ton, and it closed out at $11.7130. The canola markets got very volatile this week, posting a new contract high and then quickly selling off $93 a ton, only to turn back up again and finish $10 lower for the week. Higher soybeans and the tight Canadian canola stocks limited that loss. The July soybean contract this week, well, it was pretty strong. It actually was the big winner. It was up 58 cents a bushel on the week, and it closed at $17.05. Now, the July corn contract, well, it was down marginally. It was down 2 cents by the end of the week, and in closing at $7.79. The July Chicago wheat contract, well, it lost 9 cents over the week, closing out at $11.69. The July Kansas City wheat contract was down 29 cents for the week, closing at $12.53. And our July Minneapolis spring wheat contract, well, it was down the hardest. It was down 46 cents a bushel and closed at $12.79. Now, the wheat markets, they all did post new contract highs on Tuesday, May 17th, and then they just quickly retreated to negative territory for the week. The sell-off in the equity markets just have overruled any bullish sentiment out there for the wheat markets. The June Canadian dollar this week, well, we gained almost a half a cent. We're up 46 basis points over the week, and we closed out at 77.78. The crude oil contract, July contract, was up $1.58 a barrel, and it closed at $110.21. For next week, well, until the flight to safety mentality subsides in the equity markets, we can expect that the grain and oilseed markets will waffle. The growing conditions really have not improved, and the world food availability is still a huge unknown. So for now, we're going to look for canola to continue to be in volatile trade, but to work its way back up and retest that $1,200 area. And for spring wheat, well, the trend is still up, and last week we had said that you were to look for spring wheat to trade in that $12.50 to $13.50 range, and that's really where we are today. So we're going to look for wheat to catch itself on this here pullback and to continue to trade in this $12.50 to $13.50 range. I'm Ed Baldwin with your weekly wrap-up for Friday, May the 20th.